Today is Tuesday, March 24th. And if you're watching on the YouTube, you'll see a little different of a backdrop today than the studio. I'm joined by my dad, CEO of T3 Prosper. We are in the mountains of Colorado, and although it might not look like it right now, we are going to go skiing right after this, Dad. Welcome to the show.
I sure hope so, and thank you so much for having me.
Yeah, so we've got a historically warm winter and spring in Colorado, which has been a little bit of a buzzkill, but
Yes.
We're going to go find some skiing. We're going to ski some moguls, some blacks where we can. We're going to get out there.
We are definitely getting out there. We will find it.
You know, it's kind of right now like the markets, pretty fast, pretty unpredictable. You got to find the right pockets of mountain to get onto, and any given minute, it could look different than the last minute.
No doubt about it. And you know what? There's some risk out there, right? But we can navigate it. There's no question about it.
So let's jump into the show again. Thanks for joining us today.
Glad to be here.
We got a lot to discuss. Last episode of Positively Sloped was a couple weeks ago in the studio, so we've got a couple weeks to catch up on. But I think the biggest topic, the most salient point right now is probably what happened Friday after market close.
This was unbelievable. And anybody that trades options, you need to understand what happens at expiration. So market closes at 3 o'clock. That's Central Time. SPY trades until 3:15. So some of the ETFs trade till 3:15. So SPY closes at 6:48 and change-ish. And then at around 3:17 or so Central Time, we get news from President Trump about, something good about the war, something maybe calming it down or looking for a resolution.
It's pretty much done very close.
Pretty much done very close. There we go. And what happens? SPY rallies almost 100 points. S&P futures rally about 100 points. So here's what happens. Even though the option market was closed, 3:15 Central Time, and SPY closes 6:48 and change, so the 6:49 calls, 6:50 calls, 6:51 calls theoretically are out of the money, right? Worthless, zero. However, on expiration day, you have until 4:30 Central Time to notify your brokerage firm, which then goes to OCC, Options Clearing Corp., that you want to create an exception notice. That exception notice meaning that you can exercise options that are out of the money, or on the other end, you can not exercise options that are in the money. So what happened was anybody that owned those SPY calls, 649, 650s, that were theoretically worthless, they could exercise those calls and sell SPY on that rip higher, 90 points higher. So it's imperative that especially the retail investor understands how expiration works. Because if you were short one of those calls, 649, 650,
you were laughing at the bank.
You were laughing. You were on your way to your 5 o'clock beverage somewhere and thinking this is great. And then all of a sudden you come in Monday morning and you're short SPY where you think you escaped. So this was, I would say, some suspect timing of the announcement. But again, it really comes down to if you're going to trade options, which are unbelievable. I've been doing it for 35 years. You need to know the rules and regulations, how they work.
And it's kind of what we've become accustomed to over the last, let's say, year, just picking a time frame here, but especially with the war in Iran going on, that there seem to be some announcements that happen after some trading activity, which is unfortunate because it validates the fact that as a trader, as an investor, you don't have the information, and you're always at a disadvantage.
We are definitely last to know. But by the time we get it, the market has already moved.
For sure, and that move was incredible. Like you said, the SPY closed 648. We went from basically down 1% in futures to up 2% in about 15 minutes. You were sitting at the desk.
I was.
What did that look like to you? What were you seeing immediately?
So the first thing I saw was this big candle upwards. I'm like, what just happened, right? And so talked to my colleagues, and all of a sudden we can see the news flow coming through on X and everywhere else. What happened there? And it literally, if you go back and look at that candle around 3:17, 3:18 Central Time on Friday, I mean, it was a whoosh. Anybody that had stops in there, you got absolutely annihilated if that was in there. So again, the timing was pretty suspect, as was the timing yesterday morning, Monday morning pre-markets.
Right. So, we close finally Friday afternoon up 2% or so, and we go through the weekend. Futures are closed and then open up on Monday morning, and we gapped up 2% Monday morning to start on the news that Trump and President Trump and Iran had talks that went really well, and it looks like the war might be over. We're going to pause any activity for 5 days until next weekend, which, if you're following the trends here, seems pretty convenient. But so we gap up 2% to start Monday morning, yesterday at the time of film right now. Close around 150 basis points higher on the S&P, NASDAQ, Dow, pretty close in that range. Let's fast forward to today. We've already given back 70 bips or so.
Yeah, no doubt, because the news flow, right? And it's really unfortunate that we can't, as a trader or just as a normal person, I'm not sure you can really trust the news flow. And if you are going to trade and make decisions based on every little post that comes out, which seemingly is second by second, minute by minute,
have a lot of activity.
You're gonna have a lot of activity, and you're probably gonna have a lot of heartache.
Yeah,
it's in my estimation not really wise to do.
So this is a theme that Scott and I had talked about, or I talked about with Neil on the last episode. You and I started talking about this a year ago or 2 years ago, but like you said, you've been in the industry 35 years. You were in the industry, not to date you and make you feel old, but before cell phones and Twitter and Instagram.
Okay, let me take a sip here.
And the speed of news flow was normal. You watched the news and you got a report. You didn't check your phone and you saw a Truth Social post or a tweet. So
not at all.
Are the markets just driven by, like you kind of said, a tweet or an interview or happening overseas, or it's more news heavy and headline centric than it is fundamental at this point?
There's no question, and that makes it really tough for traders. Opportunities are still there, but when you can't trade off of technicals or fundamentals, it becomes really, really difficult. And like you said, Jake, that everything is trading off of every word that comes out. The HFTs out there and the algos that are out there, they are scraping and searching for certain words that come out. Just like when Powell speaks in one of his press conferences, certain words will trigger massive buys or massive sells. And as retail traders, right, we talked about it before, we're behind the 8 ball. Now, that still doesn't mean we don't have opportunity. We do. But what it does mean is sometimes we have to adapt the way we trade, right? I'm used to trading on fundamentals and technicals, but I've learned in this market, real difficult to do so. So I think you have to adapt. You always have to have an out. If you're trading in this market, you have to have an out. Don't think that you are smarter than the market, because none of us are.
And this is a theme that's persisted over a few years now. It doesn't have everything to do with President Trump and his tweeting. We see this around earnings all the time, where you look at NVIDIA, and I'll use that because it's an easy target, for basically every quarterly report of the last 2 years has been blowout earnings. Margins have been great, top and bottom line. And then some sort of news comes out when they have their post-earnings call, or some sort of headline, or like you said, you've got algorithms scraping all of these transcripts. And so there's something that is deemed to be negative or just not as bullish as the fundamentals are.
Right, as we would have thought.
And then the stock drops. And the most recent one is
Micron.
I mean, the run that Micron is on over the last year, it's up 320%. Memory is right now the core of the AI craze, like data centers were and microchips were last year and the last 2 years. Micron had a 35% earnings surprise last week. It's down 13% since.
Yeah, and actually this morning it's
I'm sure
down.
You've been loving that activity as a trader.
And this morning it's down literally right at the 50-day moving average, right around that 390 area. So we talk about, as a technical trader, that's something you would look at and say, hey, maybe there's some opportunity. But because of the backdrop, because of the news cycle, you kind of have to give that a second thought and say, hey, do I work with what has pretty much worked for my entire career, or do I have to change things up a little bit?
You got to adapt. And so the second topic today, and it ties perfectly into the option stuff of 320 and 323, that being Friday and Monday. But you would think with all this volume, all this activity, all of these announcements coming out, and we saw the spikes yesterday morning, that article you sent me, and not only the futures markets for equities, but also oil. How come the bid-ask spreads are widening? How come the liquidity is so thin if we have all this volume going on? I mean, average trading volume right now on SPY is 83 million shares.
Yeah, it's through the roof, but I see this all the time, and my students are asking me, and we talk about it all day long, why is bid-ask on just a call or a put option 80 cents wide? Or if I'm trying to do this spread, Why is it $2 wide when it should be 20 cents wide? And that's because even though there's high volume trading in the S&Ps and in the Qs, the liquidity flowing down into the option market is really not there. Now you may say, hey, look at all the contracts trading in NVIDIA, look at all the contracts trading in Apple, Microsoft, whatever it might be. But a lot of the institutional players are on the side right now. They have their positions on, or they're waiting. So that flow, that money is not really in the markets right now. And so we're left with, supply and demand, right? That's what bid-ask spreads is really all about. The bottom line economic fundamental of supply and demand. And the supply and demand just is not there. If you were to look at like level 2 or deeper markets, those deeper markets are so thin as you either go lower or as you go higher. So that's another thing in this market, why you have to be really, really careful with your entries and exits, because maybe you were expecting to be able to buy something on the offer, and by the time you go to do it, it's gone. It's just not there.
Especially on Fridays on expiration dates, where we're going into these weekends, and it seems like from a war tactic perspective, most of our activity is happening on the weekends. And you can take the stance that there's some strategic war play there, or you could take the stance that President Trump, it's never been a secret that he watches the markets, and that he tends to want to insulate the markets from any downturns. And so when the market's not trading over the weekend, we see activity in Iran. Maybe that's why we got a 5-day pause so that we could do it again next weekend. But that makes it pretty difficult to predict where we're going to open up on Monday, to predict any sort of flow. And I think that's probably also contributing to liquidity constraints on top of the whole, it's not just the geopolitical issue right now. We have this credit spread problem. I on the show have said I think it's more of a retail investor understanding of the product that they're purchasing, and not so much of the credit themselves. But so far, the credit issues have stayed within private credit, right? It hasn't widened out into
for now.
And that's the risk, though, is that's the next step, is that we widen. And it reminds me of the 23 banking crisis, where you had two banks that were.
You were old enough.
I was old enough for 23. Yeah, I finally get to date some events.
Exactly.
But you had two banks that were especially exposed to crypto and to some leveraged assets, and then there was fear mongers that said this is going to be a whole banking crisis, and it wasn't. So we'll see if this credit constraint is kept to just the private side, or if it widens. But that's another issue out there. That's another warning sign.
It is absolutely another warning sign. And what we've seen happen with rates over the last couple of weeks, ever since, the war started, right? And we're seeing inflation expectations actually move higher. It is not under control. No matter what anybody says, inflation is not under control. So rates reflect that. And quite frankly, the bond market led the equity sell-off that we are experiencing right now. The bond market started selling off, pushing rates higher, really before the equities started selling off. And it was 2 weeks ago, maybe 3 weeks ago, we actually dipped under 4% on the 10-year, and now we're approaching 4 or 5. 4 or 5. That is I don't want to say a dangerous place. That's a place the market is uncomfortable with. So, over the weekend, when we saw President Trump come out with some of the news, actually yesterday, Monday morning, a really good friend of mine put out an article, someone very, very respected in the marketplace here, and said, well, we used to have the Fed put, maybe we do have a Trump put. And maybe that area on the Trump put is 4 or 5 on the 10-year and 6,500 on the S&Ps. We'll see if that actually plays out. But bond market, you have to watch the bond market.
The bond market usually leads. I mean, it's way bigger than the equity market.
Huge.
The Trump put being basically a level in the 10-year or the S&P that he's uncomfortable with, and so he's going to put out some news to bounce or to lower the 10-year. I will push back a little on the inflation. I think inflation is stabilized. It's not at 2%. It's not at the level that the Fed set out to get it to, and that we talk about their dual mandate, but it has stabilized. Now, we did get our PPI report last week.
Pretty darn hot.
It was hot. Last week, March 19th, we got Fed PPI. It was 70 bips higher month over month, 3.4 year over year, which is the largest jump since Feb of last year, which was preparation for tariffs. So in that respect, PPI leads CPI.
And remember, that didn't include anything about the start of the war.
For sure.
That was February. So that didn't even include that data there. So I think that's what the Fed is really, really concerned about. And as kind of weak as the job market is, and I'm going to say, maybe the job market is stable, but definitely on the weaker side,
Yep.
the Fed is definitely more concerned about this inflation.
Always. The interesting thing will be the paradigm shift that we're going to get in May.
We'll see.
And what is Warsh, if he's confirmed, what is his number one priority? Because Powell, say what you will about Jerome Powell, but he's always been an inflation first guy, I would say, and certainly always citing we haven't cut rates in the last 3 months, probably because inflation's been sticky, even with the weak job number. So now we'll see. Last week we didn't do anything. It was probably, would you say, the 4th or 5th consecutive meeting where that was easily telegraphed?
Yes.
I think April coming up here, and which is also Powell's last meeting, is the first time in 6 to 9 months where they could do any of the 3 options. The hike seems on the table now.
It is on the table. I mean, as far as like what the markets are pricing in, CME FedWatch tool is pricing in a potential hike. I think it's around 35%, but that's not until 3rd or 4th quarter of the year. I think what's really important for people to understand, though, it's not Powell, it's not Warsh, it wasn't Greenspan, it wasn't Bernanke. The Fed chairman do not single-handedly make policy.
For sure.
And I think a lot of people have lost that. People, lost that in translation that, oh, this is Powell's fault.
Well, somebody gets blamed every week and gets called names, and then you associate him with that.
So if Warsh comes in and rates are lowered, it's not necessarily because Warsh said, I want rates lowered. Or if they raise rates, and we see the president going after Warsh now, it's the same. There is a committee. Sure, the chairman has a voice. The chairman has a big voice, but it's not a single vote.
No, but I do think that especially Trump's been very vocal about lower rates. He wants lower rates. He wants near zero rates. And so if you're putting a guy in, you're nominating Warsh to go be the new chairman, you more than likely have had conversations about why lower rates are better. Conversations, whatever you want to say, are they back and forth or are they one way? As a trader, how do you strategize? Because, a lot of trading is event-based, and whether that's earnings or a data point coming out on the economic side, how do you strategize around Fed meetings? I would say, like I said 2 minutes ago, the last 5 have been easy. We were never doing anything in the last 4 or 5. But when you get something like April where you could cut, you could stabilize, you could, like you said, a hike is not likely, but it's now on the table for this year. How do you trade around that?
So the way I trade, I don't care typically what happens 3 weeks from now, 6 weeks from now. Yes, I do, of course, in my 401ks, my IRAs, but that's not what I do on a day-to-day basis. My trading is really short-term. It's not day trading, but it's short-term. So I'm not thinking what the consequences might be down the road. What I'm thinking of is what's the best opportunity right here, right now. So when we get into a binary event, whether it's Fed meeting, whether it's a jobs report, earnings, I am typically looking for volatility disparities. So typically what we will see in the option market is leading into a binary event, implied volatility will really rise or spike up. Options will get really expensive. I typically look to sell those and then buy something as my hedge, as my protection, a little bit further out. That further out could be a day, it could be a week, it could be a month. That's about as far as I'll go out. But I'm typically looking for volatility arbitrage. I don't know what the move in the market is going to be, but I have a great handle on what volatility is going to do after that binary event.
Yeah, I think our viewer in the studio, Ella, just saw you do 6-7 and started laughing.
Oh, Ella, what is 6-7?
so when you're trading around that event, you're selling VIX basically? You're selling premium?
I am selling the near term premium. So let's say, for example, Chewy has earnings tomorrow morning. What I would look to do is sell options that expire this week, because those are the ones that have gotten really juiced up the most, and then buy something that is cheaper from a volatility standpoint, whether it's next week or a couple weeks out, because I know that after a binary event, volatility is mean reverting. That means volatility is going to settle back into its range. So I look and compare and say, okay, here it is now. I know it's going to come down here. 100% I know it's going to come down there. There's not a lot you can say in the market 100%. That is one I could say 100%.
Mean reversion.
Mean reversion.
Yeah.
100%. So that's what I will look to do. Now, if there is in an individual stock, let's say, whether it's Chewy, whatever it is, going into an earnings event, and we happen to be at a really, really big technical or support or resistance or support area, I might look to take a directional trade, but volatility is first and foremost.
Yeah, I think to bring that back to the Fed talk, we'll see. We've got another CPI report that we'll get. We've got another jobs report at the start of the April that we'll get.
Unbelievable.
Before
April.
Yeah, it is unbelievable before the April meeting. But I would expect that they've been very data dependent. Powell in his meeting notes said they've been very on the fence, really. We're just going to continue to take things as they come. We're going to let the inflation persist through the economy and see what that looks like. To your point, though, the addition of the war, and we've talked about the effects of the ongoing conflict, and the longer we go with the Strait of Hormuz under the issues that's happening there, the higher that oil is going to get, and the higher that gas prices are going to get. I mean, you're seeing $5.50 a gallon across the country right now. Now, WTI oil, a little more insulated than Brent oil. Right now, though, it's like a $12 spread on WTI
is really wide.
Brent.
Yeah. Something that we typically see, $2 to $4, maybe $5 spread. But yeah, that gap is huge. That gap is huge. And players in the oil space, in the commodity space, they're trading around that. Just like there's typically, some interest rate traders, bond traders will play the 210 spread. Mm-hmm. There is a spread for WTI Brent.
Interesting. And I mean, the news that we got this morning from Bloomberg was that Iran is now going to start charging $2 million for free passage to the Strait of Hormuz. Listen, more power to them. I mean, they're taking a page out of our playbook.
Yeah,
capitalize monetarily where you can.
I don't disagree with that. And what I would say to that is, if that really gets put into place, and that is the thing that opens it up, I think, you know what? $2 million is nothing. Yeah. Nothing for one of these oil tankers to get through there. So
for sure.
I think that would, if that ended it right there, great. Have at it.
Yeah. I mean, I don't see, I maybe was a little short-sighted in my original analysis of the war from all my,
your experience.
All my experience, but this is not going to be a days or weeks sort of thing. I mean, it's going to persist longer than that if there's not a deal made, and it seems unlikely that the two are going to come together to make any sort of deal.
Can I tie that back to inflation for a second?
Yeah, absolutely, you can.
Awesome. So if prices are going higher for gas and inflation is moving higher, if Warsh comes in, if the Fed lowers rates, right? It's this, there we go, we got 6-7 again. It's this give and take, right? Because if we lower rates typically to spur the economy, to get more spending out there. Well, if there's more spending out there, the consumer is pumping more into the economy, what's that going to do? It's going to push inflation even higher. Tough situation.
It is a tough situation to manage, and I think the easy thing to say is the quickest we can get a resolution overseas, the better we will be domestically and obviously internationally.
No doubt.
The geopolitical issues there, like we talk about the Middle East, there's always something going on. This is a fairly large escalation in the grand scheme of things, and hopefully we can get some resolution, and especially when we talk about the economy and inflation, because again, to tie it back to President Trump, that is, he's watching, and he cares about numbers, and he's very data dependent, and so that might drive him to do something there too. Speaking of watching,
yes,
did a lot of watching this weekend. Did you watch more college basketball this weekend than you have the rest of the season?
Oh, there's no question. I watched more probably in a day than I did the rest of the season, except for watching Illinois play.
Yeah.
Great. Best time of the year.
It is the best time of the year. It was, we had the first 2 rounds of March Madness. Thursday, Friday are always chaos. You got 16 games a day, which is just awesome. And
got to have the Octobox up there.
Need the Octobox. It was interesting. Scott and I and Neil were kind of building this season along. It's been an awesome college basketball season if you've been watching. Now, NIL and the ability for these big schools with big budgets to pay mid-major players to come play for them, grad students to go play for them, has really consolidated a lot of the talent into a handful of teams. And I think there was the threat in the first couple of days of like, all right, here we go again. There's going to be no upsets. Now, what I've said and what I've wanted the whole time was give me one 11 or 12 seed to make a couple to win a couple games, but let's get the Sweet 16, the Elite Eight, the Final Four of the best teams that play the best basketball. You know, we had an amazing game on Sunday with Vanderbilt, Nebraska.
Oh my God!
Best game of the tournament, probably best game of the year.
Unreal.
Nebraska hadn't won an NCAA tournament game ever.
Nope.
And now they're in the Sweet 16, and Vanderbilt was an up and coming.
Speaking of which, how about the Big Ten? The Big Ten,
6 teams
everybody.
in the Sweet 16.
Unbelievable.
Illinois guy.
38%. They're Indiana guy.
Yeah.
But unfortunately, they didn't make the.
No, we're a football
They didn't
school.
make the tournament. Yeah,
Football
definitely a football school.
Yeah, it's been an amazing tournament so far. I'm looking forward to Thursday. We got Illinois playing Houston, which is I think going to be the best matchup of the dance so far. Anything stick out to you from teams or play style or anything like that?
It just seems like so many of these games, especially with the top seeds, you get rolling, you get the updates during the game, and you say, oh, you know, breaking news, you know, number one Duke is on the ropes,
totally.
You know, 6 minutes into the game, right? And then we kind of see them pull away. But there have been a couple really close ones. So anything can happen. It's not a series. It's a one-off. Yeah. We know that anything can happen, but I agree with you. I love seeing the upsets. You love seeing the Cinderellas, but now it's getting down to crunch time, and I just want to see the best teams out.
Yeah, and I mean, 6 minutes in, Duke was losing to Siena with 6 minutes left. I mean, that would have been the biggest upset in NCAA history. Then they were completely what you're talking about is the game against TCU, the round of 32 game. Duke was tied, you know, with 2 minutes into the second half, and then ended up winning by 20. That's been sort of the theme. Michigan's done that. Where we didn't see it was Sunday with Iowa. Iowa taking down Florida.
That was great. Unbelievable. Another Big Ten team.
And now Iowa plays Nebraska. So we'll have a Big Ten representation in the Elite Eight. I'm still pretty confident in my Michigan pick. They've looked of the one seeds.
Your cousin really likes that, doesn't she?
Yeah, totally.
Come on.
They've looked the best. You know, they 2 wins by 20 plus points. Haven't really looked shaky. Their tournament or their issues all year have been if they turn the ball over a lot, they're going to be in close games. But I think Mich looks poised to make a deep run. And then again, the winner of Houston, Illinois, I think is going to have a great chance to then go beat Iowa or Nebraska to get into the Final Four.
Yeah, and hopefully for Illinois, they're not looking. I know they're not. Hopefully they're not looking ahead to that matchup, Iowa, Nebraska, because they have a very, very tough task here. And, you know, Illinois 2 months ago, could have said was a top 3 team in the country. And then, you know, they kind of fell off a little bit, and they had a big problem closing games down the stretch. Now, maybe they're peaking again at the right time now. So I've got my hopes there. And, you know, hopefully they get to the Final Four at least.
And my guy Kevin, our chief operating officer, is an Illinois guy, and we always go back and forth about LeBron, MJ. And one of my arguments internationally is MJ wasn't playing anyone internationally. U of I's best player, Peja Stojakovic's kid, Andrei Stojakovic, he's a baller.
I don't know if he's the best kid out there, but
Keaton Wagler's pretty good too.
That entire team is made up, with the exception of Wagler, really, of international kids. And we'll see what happens next year because Wagler's gone and a bunch of these other Isevich, both of them maybe are going to be gone. So we'll see. But it has definitely been a fun season to be an Illini fan.
It sure has, and I'm looking forward to this weekend of the next rounds of games. Dad, let's wrap up the episode today with our fades or trades of the week. So I'm gonna give you a statement here,
okay? And
you're gonna fade or trade and tell me why.
Great.
So first fade or trade for the week. The market will give back all of Monday's gains to the rest of the week.
Fade.
Okay. How come?
We're gonna continue to see this volatility, and I think for the reason that we talked about earlier, that President Trump watches the markets way too closely. His new ultimatum, you know, this might be the third or fourth one. His new ultimatum is up on Friday, right? He extended that 48 hours to 5 days. So I think we will see something, not the end. I do think we'll see something going into the weekend that stabilizes the market.
I will fade that as well. I think, you know, it's an easy one we could have traded that considering they've already given back about 40% of Monday's game, but I will fade that as well. I think, you know, we've seen the last 3 Mondays, I think I mentioned this earlier, have all been positive days coming off the weekend. I think he'll be looking to change that. And I think just from a market sentiment perspective, we had a great day Monday. You know, we're pulling back a little bit Tuesday, but what you can count on in this market is we might be down 80 basis points right now. By the time we hit the mountain, we might be up 1.5%. So I'm gonna fade that as well and say that we go up this week. It's been choppy. We've had a lot of consecutive down days.
Definite chop. Chop.
Dad, second fader trade for the week. So we talked about WTI and Brent and the spread that they're trading at right now being wider than normal. WTI and Brent oil trade above $120 a barrel again in the next 2 weeks.
Hey.
Okay.
Now, not saying Brent
won't.
You're
saying and.
I'm not saying Brent won't.
Yeah.
Both, in my opinion, will not. In fact, I think that we will see WTI back with an 8 handle. I know it was there. It popped up again. I think we're back with an 8 handle, and longer term down the road, when this whole thing is resolved, and again, hopefully it is sooner rather than later, you're going to see WTI with a 6 handle.
Wow. Yeah, I will. I'm going to disagree with you on this one. I'm going to trade that. We've had conversations with some guys at the firm that are like, I remember when we were trading oil, $150, $160 a barrel, no problem. I do think that we are probably going to spike again. I think there's not really the end in sight. When the 5-day pause wears off, which I'm pretty sure we already attacked again this morning. So there's not really a pause going on. The longer this continues, I think the less confidence the market is going to have in news that comes out. And I do think Brent for sure. I agree with you that it'll be close, but Brent I think definitely gets above 120. I think WTI will follow, even though we are more insulated.
This is what makes a market, and we'll have liquid markets right here.
Third fader trade. The Fed makes a move in April, and if you're saying yes, what direction?
No move at all.
Fade.
There's no move, higher, lower. No, rates are going to stay the same. There's too much in question. There's too much that they don't know about. And then with the potential transition going to wash, there's, in my opinion, unless the only thing I could see happening is, God forbid, this thing escalates to levels that people can't even imagine, we could see a massive cut at that point. Right. I don't see anything happening in April.
Yeah, I said at the start of the year that I thought the Fed would be quiet for the first half of the year, maybe 9 months. I'm going to fade this as well. I think if they were to do something, they'd probably cut. But we talked about the PPI number from February. That's coming down the pike for CPI. There's no way they're going to cut in the face of rising inflation. Right. And so I will say there's no move either. Last fader trade for the week. Let's talk about March Madness. Okay. We saw the 1 seed Florida fall. We've got 3 left. Duke's looked a little shaky. Mich looks good. Do you think a 1 seed wins March Madness?
I do, unfortunately, which means Illinois won't win. But I do, and I do think looking at the 3, especially Arizona, Michigan, Duke.
Thank you. Arizona's one I was blanking on.
There you go. It's tough to say that one of those 3 is not going to win.
Yeah, I'm going to trade it as well. I think I don't personally. I'm not a Duke guy this year. I don't think they're deep enough, especially with their injuries. I like Arizona a whole lot, even though I just blanked on them. I think they're the best team in the country. I think Michigan's 2. I think Houston's 3. Not to break your heart. So I think we'll get a Final Four with Houston, Michigan, and Arizona. And at that point, I'd take my chances on the 2 out of 3. So I'll trade that a 1 seed wins March Madness.
Yes, I agree.
Well, that's the show for today in beautiful Eagle Vale right now. We're going to go hit the slopes to get positively sloped. And Dad, thanks for joining us today. And we'll see you all next week back in the studio.
We didn't talk about who's the better skier.
We didn't need to talk about it. Some things just go unsaid.
Okay.
Thanks, everyone.